All right, so Forging is in focus. Mr. Vidyashankar Krishnan is now joining us, CMD of Forging. Vidyashankar, good afternoon. Thank you so much for your time. I remember you were talking just a while back, but at that time, because of silent period, you couldn't share some numbers. But we understand that there is a major transformation happening at the company level. Even your, commentary seemed to be a reflection of that, moving more towards tilting high margin products like EV, etc. 7 to 10 year period, you see 1,000 to 2,000 crore revenue from EV alone, focusing on markets in India, US, Europe. Give us the gist of the transformation you're taking. Improvement of margins, higher turnover. What are we aiming at achieving in the next 5 years on top line front?
Thank you for having me, Ajay. Few points. Last year we closed at about just under 1,600 crores at 1,585 for the consolidated organization. We expect in the next couple of years, few years subject to market conditions, to cross 2,500 crores. Naturally, we have developed a slew of products for the markets, and subject to markets holding, we expect to make significant progress on the growth side. We also had earlier given that we would be touching and crossing the 20% EBITDA margin by end of this calendar year in Q3 of this fiscal, Q3 of FY25, which will be sometime around October. We should be able to comfortably cross the 20% mark on EBITDA. So a lot of actions for this. We are looking at a slew of high value products and a lot of action on reducing costs and improving output and throughput.
Okay, so let's break it down. You're aiming at a 2,500 crore kind of turnover levels in the next few years. Can I safely assume that that can be a 3-year figure? Your 70% improvement in your top line in about 3 years, or could it take longer or even lesser?
I would say 3 years would be a fair enough estimate for that.
Right. And 20% margin. So you're talking about overall almost a 500 crore kind of a margin number, and that will come not only because of top line increase, but also because of a slew of cost cutting measures you are taking and efficiencies. Can you talk more about that?
Yeah, we are looking at freight rationalization, shifting some parts from different locations to bring them closer to the consuming point. Also tooling costs. Some of these have actually built into the costing systems that we have agreed with customers, but we haven't realized it over the last few years, largely focusing on the growth side. So we need to claw back on the cost side. It's not as we're discovering something new, but at the same time, we have invested quite a bit over the last few years, and going forward, this year too, our investment is in the region of around 500 crores. So to get a reasonable return on all these investments, we have to look at margin expansion by looking at cost compression.
Absolutely right, Mr. Krishnan. This is Vinny joining in the conversation as well. Good afternoon. You did touch upon a bit in terms of revamping the product mix. So by that, what do you mean by that? What is it in terms of the change in products mix? What will you be focusing on now more?
Vinny, we have moved away from moved forward from a 100% or a 90% forging play to almost 58% of our sales comes from machine products. So today we are a component supplier. That has been a transition over the last few years. And within the machine product range, we are looking at more value-added products as well. So that by increasing the extent of machine products, our margins must be able to go up.
Talk to us about how railways is also something which you are aiming at. So this entire point that a forging company is now kind of transforming into, forging of course will remain a key mainstay, but other new business areas will also be included so that your revenue mix will change and the tilt of the business. Tell us about what are the areas which you have on your radar?
Sure. We have started this subsidiary Abhinava Rizal. Basically, we've invested in that startup and taken it over 2 years back. So we are focusing on developing these motors for EV motors for powertrains in EVs. These are right now PMSM motors, permanent magnet synchronous machines, and these will supply power to three-wheelers of high performance two-wheelers and four-wheelers across the board, starting with LCVs to SUVs. So there is a huge market out there. Naturally, the EV incursion or ingress of EVs into IC engine market will take some time. So in step with that, our action is we are reasonably aligned, and we are now focusing on developing a lot of motors for this market. We are probably the only company in India. I would say, okay, maybe I missed one or two, but in case I missed, not due to knowledge, but due to lack of awareness, I would say we are the only company in India which is capable of making, designing EV motors of any size and specification. Right now, our range goes up to 150 kilowatt. So we're working with several customers across several market spaces to supply them motors, and ultimately we are looking at controllers as well. Our team has developed is in the Alpha 1 sample of controllers, and also working on where required by customers, gearboxes. So we'll be a full-fledged e-axle supplier to the EV industry over the next few years, and that potential is quite significant.
Right, sir. Thank you so much for joining in with us this afternoon on ET Now, talking to us about the outlook. Your focus on the EV side is what we will be watching out for. Thank you so much, Mr. Krishnan, for joining in with us this afternoon on ET Now. That was the management of MM Forgings joining in with us right now on the show.